Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. And before I go any further, I need to go through the disclosures. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And before I proceed, let me check on screen resolution. How does my screen look? I understand that there have been some comments about my stream being blurry, and I believe that's on YouTube only. So if I could get a all right. So Bob says screen looks great on Discord. Moonwalker, Discord is good. How about you folks on YouTube? How does the screen look? So 40 Drover says okay here. So I suggest you on YouTube you can make your settings 720p max, and that should work. And in Discord, SKM asked how to join. Just go to the Options with Doug live stream on Discord. It's just look under webinars, Options with Doug, and you'll see my name, Doug P, with a live icon next to it. And of course, he can't hear since he's not watching my stream. Let me just type in a response real quick. Okay. All right. So again, as I go on, if there is an issue with blurry screens or audio, please let me know in chat. Okay, I'm going to go ahead and continue on. So the focus of my presentation, as well as the Options with Doug chat room in Discord, is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis, and I look at how traders and market makers are positioned in the options market and how those positions change from day to day to help develop a thesis for the day regarding expected trading range and also a directional bias. And that may be a different approach for many of you, something new. Many traders use technical analysis or fundamental analysis. And again, I use positional analysis. This is a new way of looking at the market that I think provides a significant edge. And the second step of my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow with Spotgamma Hero to confirm my thesis and for setups, entries, and exits. And finally, questions and comments are welcome. On-topic questions and comments. And you can post your questions and comments in Discord and the Options with Doug chat room, and also in YouTube. Okay, and now just briefly today, what I want to talk about, my agenda for the day is, first of all, economic data, and there's a major event tomorrow. I'll talk about that briefly, and then on Friday, and then we'll go over our position analysis, and then finally talk about some setups. And there were some good setups this morning. They might have been a little bit difficult to find, but they were there. All right, so economic data, and I have covered this a couple times this week. The major event for the week is the CPI data coming out at 8:30 a.m. Eastern Time tomorrow, and that has been a big market mover in the past few months, as traders are very concerned about inflation and how it may impact the Fed, and whether they continue to increase rates, hold, or pivot, or pause. So again, the CPI data, and that, I think that is having an impact on the market today, and it certainly will tomorrow. And then on Friday, there's the consumer sentiment at 10 a.m. All right, let's go through positional analysis now. And the first thing that I want to talk about is the expected move for today, and then compare that with the expected move for the next 2 days. So I apologize if this is pretty difficult to see. I can't think of any way to expand this, but this is Thinkorswim, and this is the options chain for the SPX, and this is showing the expected move for today, tomorrow, and Friday. So you can see the big difference in the expected move, and this is real time. When I looked at it this morning, sometime before noon, the expected move for SPX for today was plus or minus 18.59 points, so 18.6 points. And now, as the day has progressed, as time has passed, that has now at 13.5. But the things to note for tomorrow, again with the CPI report coming out, notice the huge difference in today and tomorrow. Plus or minus 78 points for tomorrow. And then for Friday, which includes the information for tomorrow, plus or minus almost 86 points. So this is called backwardation, as far as the volatility goes. Or I'm sorry, this is actually contango. This is normal. That not this stark difference, but the volatility further out in time being higher. But again, this is unusual, and it's due to the economic data coming out. Okay, let's take a look now at Bookmap. And the first thing we'll look at is support and resistance levels on the chart, and I'm showing I've got a couple columns with levels here, and the first is the Spotgamma cloud notes, and these are updated automatically from Spotgamma, and they include SPX levels, and there's the 3950, SPX 3950, and also combo levels, which combine SPX and SPY levels. So two levels right here at 3975 and 3976. So these levels are given in terms of SPX and converted to an equivalent ES number. And right now, Spotgamma is adding 25 points to SPX to come up with an equivalent ES number. And the number is actually close. The number that I have that I calculated today was closer to about 22 points. Okay, so the next column, this is my Cloud Notes column, and I create these levels in a spreadsheet and use an add-on in Bookmap to display these, and I note the support and resistance levels that are included in the Spotgamma AM Founders Note, and I mark them on my charts. And I also have SPY key numbers, and normally I don't mark anything other than the 5 key daily levels, like the put wall, the call wall, the key gamma strike, volatility trigger. But in this case, this C5 level seemed pretty significant, so I marked that as well. And the reason I did that is, I saw all these reversals this morning at this level with really no level shown on the ES chart to indicate why price would keep reversing that level. So I went and looked at my SPY chart, and saw in the morning that that was a significant resistance level. And C5 means that is a combo level, SPX and SPY. And 5 is I guess kind of a lower in the range that 1 to 5 marks the significance, 1 being the greatest and 5 being the least. But in this case today, the C5, this 393 level, was resistance in the morning. Okay, so that level has definitely been in play, and it looks like the ES 3950 that's shown here, this is also in my Cloud Notes, offered support, and then price has moved up to the SPX 3950 level, and that is expected to act as resistance. So those are the levels in play today. And again, keep in mind that the expected range for today was pretty small. All right, let's talk about shifts in levels. And there were really only a couple of minor shifts in levels. The put wall for SPX increased from 3,700 to 3,800. And then for SPY, the call wall shifted down from 410 to 392. So yesterday, the 410, I think, was more of a technical, based on the definition, just kind of a again, based on the definition of the call wall being the strike with the largest net positive gamma, but 410 was really not in play yesterday. So 392 is more realistic. And Floyd's Garage asks, so it's double the expected range for today. I'm not sure that I understand your question. So the expected range for today, at the time that I looked at it, was plus or minus 18.5 points. And that was sometime after the open, sometime between the open and noon that I looked at it. I don't recall exactly when I looked at it. So the last time we looked at it, a few minutes ago, it was plus or minus 13.5 points. And the range for tomorrow is substantially higher. And we'll jump to that real quick, go back to. So the range for tomorrow is plus or minus almost 79 points. And that's shown in this upper right corner here. So the market's in kind of a wait and see mode today, waiting. Everybody is doing their final positioning before the CPI data, and expect a lot of movement tomorrow. So again, everybody's just seems to be in a wait and see and positioning mode today. Okay, so I talked about shifts in levels, and let's go take a look at the S&P 500 absolute gamma levels. And this is for SPX. So this shows that there's the 3,700 level. That was the put wall yesterday, and that's the strike with the largest net negative gamma, and it can be expected to act as support, but it was pretty much out of play. So now the put wall has shifted up to the 3,800 level, and that's more within a realistic range. And then the volatility trigger, that's the Spotgamma proprietary gamma flip level, where gamma shifts from negative below the level to positive above. And then this is the 4,000 level. That's the key gamma strike, and that's the strike with the largest absolute gamma, as well as the call wall, and that is the strike with the largest net positive gamma. So that's at SPX, and those are the levels that are, I guess, within range. And here's SPY, and I forgot to mention, we're looking at, here's the 0 level, and positive gamma above, negative gamma below. So positive gamma above shown by the black lines, and that's call gamma, and the teal lines are showing negative gamma or put gamma below the 0 line. So the put wall is at 380, and that's pretty obvious. And that's a large level of potential support. And then the key gamma strike, as well as the, actually the call wall moved up a bit. So the key gamma strike is 390. And there's the 392 call wall. So that is the playing field for SPX and SPY. And let's take a look at data now. And the data that I point out every day is gamma notional. And this is market maker's position on the gamma curve. And it's slightly negative, basically neutral for SPX. And that's shown in this left number here. And then gamma notional for SPY is quite a bit larger at minus 776. So what this means, and especially for SPY, is that traders are long puts, market makers are short puts, and they have to sell futures to hedge their delta exposure as price decreases. And as price increases, they can buy back their short futures. So what we can take away from this is SPX is basically neutral. So market makers in the start position wouldn't have much hedging to do either way with price increasing or decreasing. And again, on the other hand, at the starting point today, market makers were negative gamma for SPY was minus 776. And again, they would have to sell futures as price decreases and buy back futures as price increases. So in a negative gamma environment, they are trading with price, and that does tend to increase volatility. Now these levels became more positive today or less negative. So yesterday, gamma notional for SPX was minus 182, and today it's minus 16. And then for SPY it was minus 1060 yesterday and minus 776. So based on these numbers now, we know how market makers were positioned at the beginning of the day, and it will be very important to see how they're positioned tomorrow morning before the data, and what has occurred in the last several large economic events that, like the FOMC announcement, CPI data, that the gamma notional has been pretty large negative, and that has contributed to a Vanna rally. If the data comes out not as bad as expected or better than expected, markets rally, implied volatility drops, and these puts, as price increases and implied volatility drops, quickly lose value. Market makers' delta exposure decreases, and they can buy back their short futures, and that can help fuel a rally, especially when there's a big spark like the CPI data. So going into the event tomorrow, again, based on right now, SPY is in a negative gamma position, but not quite as negative as it was for the last few economic events. And quickly, let's just look at the Vanna charts. And this is showing how market makers' delta exposure changes with changes in price, implied volatility, and that's shown by the green line. And then as time passes, and that's shown for the next expiration in the black line. And this is SPX, and it's just slightly negative, pretty neutral here. And then we'll look at SPY and see that it is slightly more negative, just like we saw with the gamma notional number that was more negative. So again, that's just showing that market makers will need to hedge their delta exposure by selling futures as price decreases. And then finally, just to wrap this up, we'll take a look at SPX, and this is showing call gamma versus put gamma blue, and call gamma orange, and not much difference here. And SPY shows a more pronounced domination of put gamma, again going along with the steeper Vanna chart as well as the more negative gamma notional number. Okay, so let's take a look at some setups. And first of all, let's take a look at the S&P 500. So we'll go back to ES, and I'm going to look at Spotgamma Hero, and I'm going to zoom in on this morning, and what I want to point out is the divergence. this morning. Notice how traders, well, first of all, let's just focus on the total hero line. So this is ES, S&P 500 futures, and this is showing options trades for SPX and SPY combined into one signal. And the purple line is the total line. So that's showing SPX and SPY call and put transactions. And that, again, combining that into one signal. And notice overall it was negative. Overall, traders were taking negative delta positions. So they were, and let's just see what they were doing. And they were buying puts. So positioning for tomorrow, probably. And this led to several short setups in the morning. Right there, right there. All right, so let's go look at the S&P 500 chart in Bookmap. I'm going to zoom in. So remember that 393 level, SPY 393 level. So that's where that comes into play. And for me, I just like to see that level. I like to see the added confluence of some level that I can lean against. And so, based on traders buying puts, and we'll take a look at the SPY and SPX signals and see exactly what traders were doing in each of those. But they were buying overall net, buying SPX and SPY puts, leading to several short setups. And notice the shift to pink dots, reversal at that level, then price didn't quite make it up to that level. Looked like a slight stop run up to that level. Pink dots coming in, and then here is this was the easy setup, I thought. So you can see the first reversal just around 945, 950 at that level, and then another slight stop run up to that level. That's shown here with this green dot, the 389, and then the reversal at that level and all the pink dots coming in. So I thought that was a good setup, short divergence, short setup. And you could take that in ES futures, SPY shares, SPY options, SPX options. Although I would be hesitant to buy an option today based on the small expected range. Okay, let's take a look at, let's go back to Hero now. Go back and zoom out. Go back to Hero. Let's zoom all the way out. So what we can see here is that traders are continuing to buy puts. And not doing a lot with calls. And you can tell by this number over here on the right. And I believe this is in dollar terms. So 1.8 billion in terms of dollars delta versus 329 million. So significantly, the puts are having a greater impact, or even though price is rising, but traders are more involved in puts than calls. And again, that appears to me to be just preparing for tomorrow or positioning for tomorrow. So, and again, I think that led to some good short setups this morning. And let's take a look at SPX. And same thing, they continue to buy SPX puts, shown by the falling blue line. Not doing much with calls. And we'll take a look at SPY. And again, the same thing. And you can also compare these numbers and see that the dollar volume on SPY is much greater than SPX. Okay, I'm watching my screen on YouTube. It looks okay to me. If anybody on YouTube has any comments about blurry screen, let me know. On my end, it looks okay. All right, so that was the S&P 500. Again, what I saw was short setups in the morning, and then no read on this afternoon if you're looking at the options market as a signal. Let's just go back to YouTube Bookmap. So I'm looking at this yellow line is really the only rising line, and that is stop orders. So it appears to me that stops may be driving this little bit of a rally up to the resistance at 39.50. So again, that indicates buy stop orders as price increases, helping to drive price higher. And in YouTube, Big Eye Studio asked, do you prefer the one-day rolling window? And yes, especially for trading in the morning. I just leave it at 1 day, and if I want to take a closer look, especially in the afternoon, I'll may shift down to 30 minutes. But I do prefer the 1 day rolling window for trading in the morning. All right, the next setup that I want to take a look at and 4D Drover asked, what is the SPY equivalent to 39.50, and do you mean SPX 39.50 or ES 39.50? Okay, so the numbers that I calculate, um, I I just use the number that Spotgamma provides for the SPX to ES conversion, since those are shown automatically, excuse me, on my Bookmap chart. And for SPY, I do calculate the ratio for ES to SPY every couple of days, and it has been around 10.09, and today I got 10.0887. So it tends to continually drop after the rollover from around 10.09, 10.10 down closer to 10. So that ratio will get a little bit smaller every day. So I change my, and that just affects the numbers that I put in my spreadsheet by a little bit. All right, so the first setup that I want to take a look at is Amazon. And let's go take a look at Hero. Let's go to Amazon. And compared to the S&P 500, this is a lot more clear. There's a strong correlation between options trades, hedging activity, and price action. And it looks like calls were driving price action, especially in the morning. Let's zoom in on this. And just look at the orange line here. That gives me strong conviction to take a long position. Let's go back to Bookmap. I'm going to zoom in. So a lot of times, and you can certainly see it here, that stocks are a lot easier to read. There's less stuff to look at, and often a very strong correlation between hedging flow and price action, like we see in Amazon today. And then just reading question. So again, strong correlation between hedging flow and price action in stocks. The targets are very clear. Liquidity that comes into the order book, typically at the open, and stays there until it gets filled. So looking at the 93, 94, 95 level, all those orders typically come in at the open or a minute, a few moments later, and stay in the order book until they get filled. So we can see that here. These sell orders at 94 stayed in the order book until they were filled at just after 12:15. So those liquidity levels make great targets that are often very obvious in stocks. And so the entry points, if you were fast, this was a fast move at the open, catch a breakout move after the open, or here was the first pullback open entry just around 10 a.m., a little bit before 10 a.m. with a trend break, then the move higher. Again, liquidity targets at 93, 94, and 95. And then the next, here are a couple of long setups. So much easier read than the S&P 500 today. And Trader AG asked, have I touched on anything that potentially connects to tomorrow's CPI data, like knowing how key gamma strikes have been impacted for SPX and ES, and key gamma strikes remain the same, and there were very little shifts in levels. The only significant shifts were the put wall for SPX that increased from 3,700 to 3,800, and then the SPY call wall dropped from 410 to 392. And the most significant thing that I talked about was the expected trading range for SPX and how low it was or is today compared with tomorrow and Friday. So today, when we look, the expected trading range for SPX for the remainder of the day was around plus or minus 13 points. And the expected trading range for SPX for tomorrow was around 79 points. So huge difference in the expected trading range from today and tomorrow. So I'd commented today seems like more of a kind of a wait and see market, and position traders are buying SPY puts and SPX puts, positioning themselves for the data tomorrow, and that could potentially help set up a Vanna rally if the market maker's position shifts more negative, especially in SPY, and the data comes in a little better than expected or not as bad as expected, then that could contribute to a rally. So definitely, yes, we expect a significant range expansion tomorrow. Put buying today could contribute to a put Vanna rally tomorrow. All right, so that was the setup in Amazon. And if it keeps going higher, it looks like the ultimate target would be the liquidity at 95. And let's go take a look at Hero again. And for price to continue to rise, I would want to see traders continue to buy calls. And it looks like, looking in the one-day rolling window this time, so in this time period, this has been pretty flat. When you see that, it's often a good idea to change the rolling window period to something shorter. So there was a question about this before, so I'm going to shift down to 30 minutes now. And so I don't see any significant reason as far as the options market goes to take a long at this point. Okay, let's change that back. Actually, let's just go to the total signal. Okay, so JEC asked, could you please explain a Vanna rally? And some users might not know what that term means. Okay, so Vanna is a second order Greek, and it is the change in delta with the change in implied volatility. And a Vanna rally occurs when market makers are in a negative gamma environment. Again, traders are long puts, market makers are short puts, and if the data comes out better than expected tomorrow, or not as bad as expected, and price starts to rally, implied volatility will drop. So that is one item contributing to the puts decreasing in value. Implied volatility drops, delta decreases, market makers' delta exposure decreases, and they don't need all those short futures anymore, so they can buy back short futures. So that is one thing. Just the Vanna alone, the change in implied volatility and the drop in delta can drive the rally, again, with market makers buying back short futures. And then the second thing is price increasing, and that also causes those puts to lose value, to lose delta. So with price increasing and implied volatility dropping, puts are losing value, market makers' delta exposure decreases, and they can buy back their short futures. They always want to remain delta neutral. Okay, I hope that was useful. And we talked about ES, SPY, and SPX. Nice short divergence setup this morning. And the next one I want to take a look at is Moderna. And what I saw this morning was a slight divergence here with calls. Traders, Moderna's price seemed to make a equal high as traders were selling calls. And let's just look at the total signal. Total signal also not rising, not supporting price, falling slightly. So it looks like the short setup there was at 1050. Oops. Thought I cleared that. All right, let's go take a look at Bookmap. Moderna. So there's that short setup. And reading this in order flow, you can see that it acted as resistance once, this 188 level, with this buy sweep, all these small green dots showing a buy sweep up into that level, and then rejection. And then the second test of that level, again with now the pink dots coming in, aggressive sellers, and the target at the 184 liquidity. So that's a short setup in Moderna. And I'm going to go through these rather quickly. I've just got a few minutes left. Next one is Microsoft. While we're waiting on that, let's go take a look at Hero. So I thought this was more of a bullish setup here. Let's go take a look at Bookmap. Microsoft. So here was the setup. This trend break, reversal higher, just below the 232 call wall. In this case, it acted as support, and price reversed higher with the target at the 235 liquidity. Let's go back and look at Hero. Oops. And let's just see. So in this case, traders were selling puts. That seemed to be driving price action more this morning with the rising blue line. Zoom in a little bit on this morning. And here traders started selling puts as price was dropping down to that 232 level. Then traders started buying calls and price reversed higher at that level. Next is Netflix. And what I noticed here was a slight divergence with Hero, and I'm looking at the purple line, the total Hero signal, making slightly lower highs and then dropping off more sharply, leading to a short setup. Really anywhere in here. And well, actually, I think I have this marked up on the Netflix chart in Bookmap. Let's go take a look at that. Yeah, I marked that this morning. So you see the falling Hero line. Then a break out of this consolidation range, slightly lower highs, and then a break out of this range. And good for, about 3 points or so, which is not a lot for Netflix. And the target, I would have targeted the 320 key gamma strike. All right, the next one, QQQ. And let's go take a look at Hero. So traders they're buying puts and buying calls that they were in them this morning. Let's zoom in just a bit. So this morning they were buying calls and selling puts. Looks like calls were driving in the morning. And let's zoom all the way out again. So traders continue to buy calls slightly. Looks like there was more activity in the morning and they're buying puts. But overall, it looks like calls are driving, which is, again, in direct opposition to the S&P 500, SPY, and SPX. And this has led to a couple of good long entries right at this 274 C1 level. That's a combo 1, indicating that it is a significant level. C1 is the highest in the ranking of 1 to 5. So here was the first setup, looking at the, I'm going to zoom in. Looking at this little trend break and a reversal at the 274 C1 level. And again, the same thing, trend break and reversal higher at the 274 C1 level as traders were buying calls. And let's take a look at Tesla, and then I'll look for questions. There's Tesla. And let's go take a look at Hero for Tesla. So very strong correlation between hedging flow and price action in the morning. Let's zoom in on that. Traders were buying calls. So from the open until about 10:30, that was a good long setup. As traders were buying calls, market makers are selling the calls, and they have to buy stock to hedge their delta exposure. Let's go take a look at Bookmap. Going to zoom in. So there's that quick sharp rally in the morning. Somewhat of a trend break, consolidation, and then the move higher up to the 125 call wall. And that was the target. And notice the high liquidity at that level. So a significant gamma level as well as a high liquidity level shown in Bookmap. So great long setup in Tesla this morning. Then kind of a slow grind after this quick drop. Notice all the pink dots coming in with a final sweep up to about 126. All the pink dots, the aggressive sellers coming in and moving price down, back down to 122 liquidity. All right, let me check for questions. And Big Eye Studio asks what you're looking at in terms of taking a position on the Amazon chart. So Amazon, traders were buying calls. So I know that market makers are selling calls and they're buying stock to hedge their delta exposure. So that I want to trade on the side of market makers. So that was the hedging flow that I was looking at. And then in Amazon, there's no way of knowing. There's no indicator that shows stops and icebergs for stocks. That information is only available for CME futures. So what I have to look at in Bookmap for stocks is order flow. And I'm looking at liquidity levels as well. So order flow is I'm looking at the size and color of the dots, and I see these big green dots, big buy orders, market buy orders coming in at all these turning points. Liquidity targets above, especially the 95, and price seeks that liquidity. All right, so this is a stock where I had a reason to take a long. So I talked about Amazon and what else? Microsoft, QQQ, and Tesla. So if you didn't catch that, go back and watch the recording. I talked about long entries in all those stocks. And Big Eye Studios ask, can I zoom into the first thing in the AM, first 30 minutes? And which stock do you want to look at? You've seen the stocks that I have here in Bookmap. Let me know which one. And there's a question about AMC. I don't have that open in Bookmap. We can take a look at Hero. So right now I'm just looking at my watch list. And I have switched from my watch list to the entire list of stocks with Hero. So this is AMC. And I normally don't, I'm not interested in trading stocks that are such low price. And plus, I think my broker probably would indicate that AMC is hard to borrow. So I would either have to try to find shares to short, or it's just not worth fooling with. I prefer to trade big cap stocks mainly that are extremely liquid and often have a strong, almost always have a strong correlation between hedging flow and price action. So anyway, here's AMC. And if that's something that you like to trade, this certainly gives you a good indication for a long, showing that traders are buying calls. Market makers are selling calls, and they have to buy stock, AMC stock, to hedge their delta exposure. So certainly Hero here indicates that a long was the way to go. And then if I had it open in Bookmap, we could look at the liquidity levels for targets and potential entry points. Okay, and final question, back to Tesla. And again, I urge you to Big Eye Studios, take a look at the recording. I talked about Tesla before. We'll take a quick look again. And I zoomed in on the first hour. So the way that I would trade this, first of all, I see that, we'll just stick with the total signal here. Well, first, take a look at the total signal. Bullish. Traders are taking positive delta positions, and I can see exactly what they're doing, and I see they're buying calls. So in my mind, that's an even stronger signal. Traders are buying calls. Market makers, again, are selling the calls, and they have to buy Tesla stock to hedge their delta exposure. So as price increases, they keep having to buy stock to hedge their delta exposure. So that is Hero. Let's go to look back to Bookmap. Go back to Tesla. And look at the order flow. So pretty choppy in the first, really pretty choppy in the first half hour. But, just looking at price action here, you can see somewhat of a trend break. This really kind of a downward, let me clean that up a bit. Kind of fine tune that a little bit morning. So a few higher lows, then a break out of that range, and somewhat of a consolidation here. Change that to a rectangle. Consolidation here, and then price breaks out of that range, does a just clear all that out. Price consolidates, makes a series of higher highs and higher lows, and this final test at VWAP here. Green dots, there's a buy sweep, and then price takes off. So I guess really anywhere in here would have been your long entry, and a clear price target. Yeah, let me change. Thought I had. Clear price target at 125 and kind of a bonus target here at 126, both high liquidity, especially 125. And notice all the green dots coming in here. So there were multiple pullback entries with definitely bullish order flow. See all the green dots, buy sweeps, the small green dots, buy sweeps, and the large green dots, market buy orders, taking it up to the 125 call wall liquidity and above. Okay, buy sweep is indicated by a series of green dots, yes. Okay, I am going to wrap it up at this point. That's all I had for today. Oops. And I think that's got all the questions. So thank you, everyone. Thanks for watching. Thanks for your questions and comments. And regarding the blurry screen, it looked okay to me. If if anybody has any comments about the screen resolution, please let me know. And remember, tomorrow 8:30 a.m. CPI data should be a big market mover. And I will see you tomorrow. We'll talk about how the market reacted after the data. So again, take care. Thanks for your questions and comments, and I will see you tomorrow. Bye.